Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, August the 23rd. The year's 2021. Let's talk trading. Money plan. These videos are for educational purposes only, and your results may differ from mine. Money plan. We talk about trading plan all the time, and we talk about risk management, and we talk about money management. So, what's a money plan? Well, think of a money plan in trading as you would in life. You have a goal, how much money you want to make, and then what you want to do with that money. Because if you don't have a real reason for making that money, you're not going to be motivated. So if you have a money plan saying, I make X number of dollars and I'm going to buy this or I'm going to pay off that, then you've got something to focus on. And then, you might want to have it say a 5-year money plan, a 10-year money plan, maybe even a 30-year money plan, depending on how old you are and you're starting to think about retirement. So when you're sitting down at your trading platform and you're looking at price on the charts and you're in a trade and maybe you're up a couple of pips, you might think, oh, well, that's just a few bucks, no big deal. Next thing you know, you're down a couple of pips. But if you think, well, hey, I got this money plan and, every $10, every $100, every $1,000, that's, one step closer to where I want to be. And so you start looking at the money a slight bit differently. And sometimes that's the difference that makes the difference. Rather than worry about whatever little amount you're about to gain when you exit the trade, you think that brings me closer to my goal. That's less distance I have to travel now in my money plan. And, some people go, oh, it's just semantics, blah, you're just talking, blah, blah, blah. It's like, no. You see, because we talk about the psychology. And so you have to do whatever you need to do to have the right psychology so you can win. Because if you're up and then you're down, you had a chance to win. But for whatever reason, you didn't take it off the table. And now the market took it back, and maybe it took, not only did it take that back, maybe it's taken some of yours too. Do you really want that to happen? So you really need to focus on that money plan. And just think when you're up, you're that much closer to that big goal, whatever it is. So keep that in mind, as you look at the charts and as you're trading. And then maybe that might be the one little thing that starts turning some losers into winners. Might be small winners, but they're still winners. So we're looking at the weekly chart here. We can see that we're 108 pips over that weekly open right now. All but one gap is filled. Obviously, we hit the pivot on the weekly already. That's something I called out. And remember, yesterday, I talked about this 136.41, and if you're near that, you want to trade away from it. Well, we're 84 pips away from it. So I hope somebody who watched yesterday's video picked up on that. And I think I might even mention that on Friday. You want to start trading away from that yearly open. So we're definitely putting in a big range here for the opening range for the week. 118 pips at the moment. Once again, 84 above the open, only 172 below the monthly. So who knows? Maybe we'll get back to the monthly open. And there's the monthly open at 138.97. Anything could happen. And also, I think when I was showing this chart last week, I talked about the order block traders, and I said, here's an order block right here. And you see price came down, didn't break out of that order block, but it was in the wick zone right here. this area, these two wicks, and you see price pretty much went right through that and then continued upward. That's just, once again, just, looking at the chart, analyzing the price, and we went through the inside bar, the monthly inside bar. We're inside of that now. We're also inside the daily inside bar from 21 days ago. So these two numbers are going to be back in play. 37.19 to the short side and 37.79 to the long side. 118, you see we've got a bunch of pairs over 100 for the day. We blew through Friday's high, 85 pips above it at the moment, which, if you look at it, remember the yearly open was 36.41, so once again, you're right around that yearly open. And as you can see, we took out the missed pivot from one day ago, and we took out yesterday's pivot. I'm sorry, we took out today's pivot because the market opens on Sunday. So range is large enough, so red rats might get the feast today, though I might wait. Showing we took out the weekly pivot again. So daily pivot hit, weekly pivot hit, monthly pivot hit. So pivot traders were rewarded this month, this week, and this day. Wick zone in and out of the lower, in and out of the upper. You see here we had a dip back in and through and then back out. So it gave you another chance at that 36.41 yearly open level to get in the trade last night. Take advantage. And looking at the price action, higher low, lower high here on the M5 chart, which for some strange reason, I'm not sure, did I set that to current chart? I think I just had it set to the current chart. Yeah, current. Because normally we have it set to the 1 minute. But you can see we're putting a 3 ball at the top. And if you switch over to the 1 minute, you can see the 25. But when this candle closes, we'll probably move up a bit to look for that reversal. Walmart trading, which I need to put that indicator on the other chart. So you can see here the ranges still are muted, but we just got a lot of green moving up here. So average range over 107 pips. So you can see here throughout the day, these past couple of hours, including the current hour, just not much price movement. Now, but even in the London session, there wasn't much movement. So as I mentioned last week in one of the videos, when you start to see your statistics change, oh, I'm sorry, this is close minus low. I need to put that back to high minus low. Let's see. It still had some muted ranges, had some good ranges 2 hours ago. So yeah, that looks a little bit better. Average range 14. So you can see here the last 3 hours below the average, but you can look at the percentiles and see where price falls in. And just looking at the imbalance areas, you can see we've left some behind, not very big on the H1, What's interesting though was on the daily, taking out those imbalance areas. You have a couple of red ones, but the green ones are all gone now. And you can see here on the weekly, there's one way down here. Monthly, same, we've got it to the downside. See, I already looked at daily. H4, you can see we've got a red zone and a green zone here. Sell imbalance, buy imbalance. So there might be some play in this area because right from here to here, we're creating another imbalance. So it should be interesting if price tries to return back down to the 3,700 level. And, once again, showing the rat zone, ATR, open plus ATR, we've exceeded the percent. We're at 138% of ATR from the open right now. So that's quite the move. So we've got what, about 3 hours left in the trading day. So there might be some reversal. Let's see if we switch to daily, and if we switch to smart ranges, we can look at the high minus the close. So on the daily, let's see, on green days, we're still pretty much above 20 on the green days on the pullbacks. Of course, on the red days, for the most part, you're going to be bigger than 20. But even though on Friday we had such a muted day, it's only 16 pullback, so it didn't quite come back 20 plus. So 3 days ago on a green day, 34 pip retracement and a 5, a 27, a 24, 28. So it looks like the high minus close for the most part is paying off for the red rats. And let me just put this back to high minus low range. So that's it, fellow traders. Once again, your money plan. It's not just, how many pips you want to try and make per trade or per day, but it's the bigger plan. It's how much you want to make over the course of the year or 5 years or 10 years or 30 years, and planning it out and looking at at each little win is one step closer to that goal, and not poo-pooing those 1 or 2 pip wins just because maybe the dollar amount is relatively small. But it's just ground that you don't have to make up. Not to mention, in the event of a loss, maybe you had a 2 or 3 or 4, 1 or 2 pip trades, and you take a loss. Well, now, of course, you're going to have to make that up, but you've already moved forward. So moving backwards, you might still be ahead for the day. It's just something to consider when you're trading. It's not a end all be all. It's not a magic pill or bullet or whatever. It's just something to think about and to get your mind focused, in the profit. So, fellow traders, just remember the next time you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.